Hello everybody, what's going on? So few important updates are coming from NIO. The newest weekly numbers for Chinese NEVs just dropped for the second week of August 2026. And if you have been watching the noise around NIO, you need to see what exactly happening behind the scenes. The latest data cited by Goldman Sachs shows new brand new orders coming in at a solid 6,400 units in a single week. That ties them directly with Li Auto and puts them right alongside Xiaomi's 7,200 and Xpeng 8,500. But here is the kicker. NIO is pulling off these numbers without launching any new models for the entire second half of 2026. While competitors are burning through cash and product cycle just to keep orders alive. NIO's core lineup, the ES8 and the newly launched ES9 flagship, has fully established the market. Now let's look at the actual horsepower driving this train, the ES8 and the ES9. NIO just officially announced that the 140,000 ES8 has been delivered. To put that into perspective, it took only one single month for the ES8 to move from 130,000 to 140,000 deliveries. That is a steady, relentless pace of 10,000 units per month for a premium SUV starting near $56,000. The introduction of the new 5-seater version of the ES8 in July opened up an entirely new buyer segment, expanding the lineup alongside the 6 and the 7-seater version. And then you have the flagship ES9, which launched earlier this summer and has already been delivering thousands of units every single week. In July alone, the premium ES8 and the ES9 accounted for over 83% of all NIO main brand deliveries. We aren't talking about low margin economy cars here. We are talking about high margin executive class vehicles that bring in real cash flow. Now look at how the sub-brands are setting up the next phase of growth. Onvo is building massive momentum with models like the L80 and the updated L60, locking down the family SUV market. Meanwhile, Firefly is giving NIO a firm footprint in the compact high-end space. And what happens when the policy support kicks in? The market is expecting additional policy support for electric vehicles heading into fourth quarter of 2026. While NIO's current momentum is running on pure organic product demand, any Q4 policy tailwind will act as an absolute force multiplier for Onvo and the rest of the fleet. So the big question here is that what does all this mean for the NIO stock as an investment? Higher average selling price means expanding vehicle margins. NIO main brand averaged a transaction price of over 434,000 RMB, around $64,000 in July. That scale generate billions in monthly revenue directly dedicated to pushing towards sustainable profitability. Add to that customer loyalty metrics that lead the entire Chinese EV industry, with ES8 scoring a highest in class net promoter score of 85.3, and you have a brand with a massive loyal moat. Customers aren't even cross-shopping rival models before buying an ES8. Over 57% of buyers order it directly, which is a great thing, I would say. When you look at the big picture, the narrative around NIO is shifting rapidly. They aren't just surviving the EV war in China, they are solidifying their position at the top of the luxury segment. With 140,000 ES8s on the road, the ES9 firing on all cylinders, Onvo scaling up, and Q4 policy catalyst right around the corner, NIO has built a resilient execution machine. The foundation is set, the volume is real, and the upside trajectory for the long-term investors is looking stronger than ever to me. So prepare now. With that said, thank you so much for being here. See you in next one.